Mr. Mahendra Ananthula, the Group President at Antony Waste Handling Cell Limited, joins us on the show. Hi, thank you so much for making time and speaking with us. Mahendra, begin by telling us what does the order book position look like, because the street was banking a lot on a lot of municipal corporations being added, but the overall execution and addition has been slow. Your response?
When we talk of order book, we have a very healthy order book of almost 12,000 crores. That's by no means a small number. We are very strong. We have a very strong, healthy order book in the Mumbai metropolitan region and the Delhi NCR region. As far as execution goes, I would say that we have definitely improved. Our first waste to energy project in Pimpri-Chichwad is going to get commissioned in next quarter. Our first Mumbai construction and debris processing waste also is going to get commissioned in this fiscal year. So by and large, I would say that all the projects from the execution perspective are on track now.
The execution is on track. That's good to know. So talk to us about what kind of growth do you envisage in this year and the next year? What could be the growth rate and what's the outlook on margins?
See, this year, we closed with about 875 crores of top line, with including 650 crores of core business revenue, core revenues. Our EBITDA margin of the core EBITDA margin was about 22%. We expect to maintain similar kind of EBITDA margins even going forward. In terms of top line, we are targeting a CAGR growth of almost 18 to 20% per annum for the next 5 years.
Oh, that's good to know. And if you can just give me a bit of a color on margins as well, if you can give me an indicative range there.
So it's about 22%, the EBITDA core margins.
Okay, so 32% is the core margin. But talk to us about the capex and the expansion plan. How are you going to fund it? Because there was a bit of an overhang regarding corporate governance and IT raids, etc. as well. How's the entire balance sheet panning out for you in context of that?
If you look at our net debt to equity ratio, it's at a very comfortable and it's only about 0.4. So which basically gives us a lot of space to fund our future targets and future CapEx programs.
Okay, Mahendra, a little short on time today. Would have loved to chat more, but appreciate you joining us on the show today. So that's the management of Antony Waste, quite confident about the outlook, saying that the order book is quite strong and they're likely to execute it well as well. But with that, completely out of time on this edition of the show. Thank you so much for being with us.